In late July 2025, European Commission President Ursula von der Leyen flew to Scotland and met President Donald Trump at his Turnberry resort to announce a 15% tariff framework deal between the US and the EU. At the joint press briefing, von der Leyen called the deal a trade deal between the two largest economies in the world. It will bring stability. It will bring predictability. She described the 15% tariff as the best we could get, emphasizing that the alternative could have been far worse. Trump had threatened 30%. While some critics later joked that she looked submissive, there is no evidence von der Leyen acted like a schoolboy or behaved unprofessionally at that conference. In fact, her public remarks were measured and diplomatic. One hardline voice, Hungarian Prime Minister Viktor Orbán, mockingly quipped that Donald Trump ate von der Leyen for breakfast during their meeting, a jab meant to underscore how much pressure the EU is under. But aside from colourful sound bites, von der Leyen simply noted the deal was the best we could get after tough negotiations. She did not display any schoolboy manner. Orbán's comment was meant to ridicule the outcome, not to report her actual demeanour. In any case, this handshaking ceremony, difficult as it was for Europe, was far from some wild grown man claiming someone else's father. That was an unrelated insult not linked to any official statement. Chinese observers saw clear geopolitics in the deal. Former Chinese ambassador to Germany Xi Ming warned that this EU accord will not help the bloc achieve strategic autonomy. In Beijing, his message was blunt. Europeans talk about reducing dependency on China to lower risks, but they remain even more dependent on the United States, in both security and economics. She noted that by capitulating to Trump's terms, the EU has in effect replaced one dependency with another. In short, China's diplomats argue, this deal deepens Europe's reliance on the US through heavy energy purchases and investment pledges, while it does little to lessen China's importance to EU supply chains. Those are sobering words. The deal may stabilize trade in the short term, but it makes the EU even more bound to America. President Trump has made tariffs his go-to weapon. By insisting on a 15% tariff on most EU goods, half of the 30% he'd threaten, and demanding huge American energy and investment purchases, he effectively reshaped the rules of transatlantic trade on his terms. US officials boast this as a victory, opening Europe's $20 trillion market to US farmers, fishermen and manufacturers, but critics warn it's essentially a one-sided concession by Brussels. Economist Federico Steinberg writes that this deal is a geopolitical victory for Washington and makes Europe look weak. In particular, Steinberg notes that Trump can still raise tariffs again later if he likes, using them as leverage. As he puts it, when Trump perceives that he can score a political win, he may once again use the leverage provided by tariffs. In other words, tariffs remain in Trump's toolkit. Europe's allies fear that once he sees the EU caving in, he'll do it again to extract further concessions. Is using tariffs to reshuffle trade rules fair or wise? From an economic standpoint, most experts say no. Steep tariffs tend to drive up prices for consumers and fuel inflation, as seen in Trump's first term. They also violate the spirit of WTO rules and undermine the principle of multilateral free trade. French EU Affairs Minister Benjamin Haddad sums it up bluntly: Trump's approach is economic coercion and a complete disregard for the rules of the World Trade Organization. He warns that Europe must wake up or risk decline. In short, many observers in Europe and China alike see Trump's tariff threats as bullying. For the EU, trying to placate this by saying 15 is the best we could get is a defensive move to avoid a full trade war, but it is not a proud triumph of autonomy. The deal split Europe's leaders. Some top officials breathed a sigh of relief that a trade war was averted, while others complained it was a humiliating capitulation. Germany, Chancellor Friedrich Merz hailed the agreement as preventing a trade conflict that would have hit the export-oriented German economy hard. Germany, with its big auto sector, would have suffered greatly under 30% tariffs on cars, so halving that to 15% was seen as the best we could get. Still, German industry leaders like the Auto Group head warn it will cost billions. Merz admitted Germany will face substantial damage under the new tariffs, but said Europe couldn't expect to achieve any more. French politicians were outraged. President Macron stayed silent, but European Affairs Minister Benjamin Haddad called the situation not satisfactory and urged activating the EU's anti-coercion measures. Former Prime Minister François Bayrou condemned the deal as submission, calling it a dark day for Europe to bow to Trump's demands. In France's view, the EU gave away too much and showed weakness. Italy, Prime Minister Giorgia Meloni, usually an ally of Trump, cautiously welcomed the agreement. She said it is positive that some deal was reached and that it avoids potentially devastating consequences. But Meloni stressed she still needs to see all the details to judge it fully. Spain, Prime Minister Pedro Sánchez said he would back the deal without any enthusiasm. He expressed support for von der Leyen's efforts but didn't celebrate the terms. Sweden, the trade minister, called it the least bad alternative and noted that at least the deal creates some predictability. Swedish industry was worried about tariffs on machinery and autos, so certainty, however imperfect, was a relief. Ireland and others, Ireland, deeply integrated with both the EU and US, said it regretted the new tariffs but welcomed the clarity on the rules of engagement. Other smaller EU states like Romania also said a deal was better than chaos. In short, Europe's camp was split between relief at avoiding 30% tariffs and anger yielding to Trump's bullying. A Reuters roundup notes that, aside from France's fury, most EU states largely backed a deal to dodge a damaging trade war. EU Trade Commissioner Mauro Afovi put it bluntly, under these very difficult circumstances, it's the best deal they could get. This agreement is only a framework, not a final treaty. It still requires formal approval and detailed follow-up. The EU Commission has the legal mandate to move forward, but it must still secure consensus from all 27 capitals. As one report notes, EU ambassadors were poised for a debrief and joint statement by early August, but any actual tariff changes on the EU side won't kick in until EU laws are adjusted, which could take more than a week. Meanwhile, in the US, the 15% rate goes into effect immediately by presidential order on August 1st. We make a bold prediction: Europe will chafe at these terms and implementation will be rocky. Many of the deal's pledges, like buying $750 billion of American energy or $600 billion of US exports, are politically and economically unrealistic. Analysts already call the promised $250 billion-year energy imports delusional, and it's hard to see European companies rushing to make huge additional investments if they don't see a clear payoff. Expect more haggling. At least the automotive and steel quotas will need renegotiation as promised. Countries like France, Spain, or Hungary may push back on specific sectors: wine, aerospace, defense. Domestically in Europe, some politicians, notably in France, have urged activating the EU's anti-coercion instrument, essentially a way to retaliate against Trump's tariffs if the situation worsens. On the US side, a big variable is politics. Trump made this deal with one eye on domestic election year messaging. He called it the biggest deal ever for US jobs. If he remains in power, he can and will use these tariffs as leverage again, perhaps demanding even more concessions later. If a new US president arrives, they might ditch the deal or renegotiate differently. The deal also ties Europe closer to US policies, for example, by increasing gas and weapons buys, which could limit Europe's freedom to pursue independent paths. NATO unity aside, Europe may find it harder to distance itself from American strategies on China or Russia. Importantly, this deal must now clear the EU institutions. EU ambassadors and trade experts will scrutinize the text, and the European Parliament or national parliaments could raise objections or demand changes. Any domestic political backlash, for example, if carmakers or farmers cry foul, might force tweaks or even derail parts of it. In short, the framework is precarious, and both sides may yet walk parts back if pressures mount. It happened. Von der Leyen did meet Trump at Turnberry and announce a tariff framework deal. The deal sets a 15% US tariff on most EU exports, half the 30% threatened, and requires large EU commitments to US energy and investment. Power dynamics. Critics like China's Xi Jinping and EU hardliners say this deal deepens Europe's dependence on America. In effect, Europe traded off one set of dependencies on US sales against another on US energy and security. Observers warn that Trump can still ratchet up tariffs later if he feels Europe isn't complying. EU split. Some EU leaders quietly backed the deal to avoid economic damage, for example Germany, Italy, while others saw it as a capitulation. France's Bayrou called it submission. Hungary's Orbán quipped it was one-sided. The result was relief in boardrooms but anger in political circles. Bullies vs rules. Many analysts agree that Trump's bullying tariff tactics are harmful in the long run. European officials note that Trump has chosen economic coercion over fair trade. They argue Europe should eventually wake up and take steps toward real strategic autonomy, whether through trade diversification or investing in its own industries. Outlook: the so-called deal is only a framework. It still needs formal approval and detailed rules. In the coming weeks, expect tough negotiations over the fine print: cars, steel quotas, aerospace, alcohol, etc. Some promised concessions might never materialize. The EU's big energy pledge looks especially dubious. We predict the deal will come under intense scrutiny and may only be finalized in watered-down form, if at all. Global businesses should beware. This may only postpone a trade war rather than resolve structural tensions. In the final analysis, EU leaders thought they were reducing risk, but as the Chinese diplomat pointed out, they may have simply traded one master for another. The burning question now is, have Europe's hopes of weaning off China instead fed a new dependence on the US? All signs suggest the EU must act quickly to bolster its own autonomy or risk remaining a junior partner in a Washington-led world order.